Still on the first part, chapter 1.3, and this is types of options. Now, under the type of options, we've seen on the previous recording on what is a call and what is a put. And before moving forward to the 60 seconds option, I would like to take a look to show you at the expired positions. These are the two examples that we've took last time when I illustrated what is a put and what is a call. If you remember, we bought a call option for the Australian dollar, US dollar, and that call option was having 75% rate of return, a potential payout, and basically in order for the call option to be winner when the time of expiration, it needs to expire in the money. Now the strike price, as you can see, has been 0.9295, so this is a 5-digit account. The asset was the Australian dollar, US dollar. This is the position ID, the identification. Each trade that you take, each position has one ID there in order for you to track the positions. So the strike price, the type of option, either it is a call, either it is a put. Remember, when you buy a call option, you are looking for price at the expiration date. This is the end date, okay, and this is the expiry date. So you are looking for price to sorry about that. So price to be higher than the strike price. So this was the strike price, 0.9295. The end date, this is the expiration price, 0.92911. So 91.1, it is higher than 905. There you go. The result was a winning option, and at the end I invested, the amount that was invested was $10 US, the investment $10 US, and the return was 17.5. At the time of the expiration date, basically your account will be credited with this amount after your option was expiring in the money. Now, the next example, if you go on the previous recording, it was dealing with a put example. So under the what is a put recording, you can see the euro-dollar explanation and the euro-dollar option example. What I did there was to buy a put option, so not to sell a put option, okay, to buy a put option. And if you remember, whenever you are buying a put option, you are expected for the price at the expiration date to be lower than the strike price. That means that at the expiration date, the price of your security or your financial product, in our case here the euro US dollar, should be lower. So you are expecting to for the market to go to the downside, and it is like you are shorting on the spot market. Now under that example, this was the position ID. Then this was the asset, the euro US dollar asset. The strike price 131.428. This was the price that we agreed on at the moment that we bought the option. And by the moment that we agreed, either we agreed manually or automatically by the broker, we went into the option. Now this was the end date. So the end date was 5:30 on that day, and in order for this option to be successful, whenever you are buying a put option, or in other words, in order for this option to expire in the money, the price of the financial product or the underlying security should be lower than the strike price. Now the strike price was 131.428. This was, so we bought a put, and at the expiration date the price was 131.26.7. That makes that 131.26.7 is lower than 131.428. There you go. That is a 1 as a result. So the examples take, this example also was a winning example, and the return was 3.5. Why 3.5? Because the investment amount was $2. So we invested $2 only for the purpose of illustrating you what is a call and what is a put, and then the return is 33.5. Now, this, what you are seeing here, total current profit or loss, is the amount that that your current portfolio is showing. For example, the open positions. Now we have the US dollar Japanese yen. We bought a call, so we are expecting at the time of expiration in 2014 that the price of US dollar Japanese yen to be higher than the strike price. So the strike price is 97.56, and we are looking at that expiration time to for price to be higher than 97.56. Now definitely we are not going to hold this one that long. I mean, this is a demo account. Normally you should not get involved into such long positions unless you are an investor, not a speculator. Binary options are mainly for speculating on the currency markets or the asset you want to trade. And there you go. This is why you have here the total current profit and loss 175. If by any time until the expiration the price of the underlying security, this is the price, the current price 99.44. If any time before the expiration the price is going below the strike price, then the potential payout here would be zero. You will see a zero here, and the total current profit and loss would be zero. But this refers only to the open positions, not to the expired position. Anything that you see in the expired positions, this return 3.5 and 17.5 are already credited into the account under the balance. So you should see here under the account balance the whole amount that we won after that binary option. Now, with those two examples, I wanted to show you the outcome. They were both winner. Binary options by definition they try to be successful. Let's say a successful tool for trading on the shorter time frame. So basically for short-term horizon. However, you may also trade binary option on a daily basis, on a weekly basis, monthly basis, and as you've seen in the previous example, also on the 1 year basis. Now the next recording is going to deal with the 60 seconds option, and I will start now, and we'll continue with the next recording. So another type of option is the 60 seconds option. Now, as the name suggests, 60 seconds options, they take only 60 seconds to reach expiration. This is a very short-term option, and because it is a very short-term option, it is providing the opportunity of a quick return. As you can see, this is the 60-second option. Let's say platform here, and we will show you. I will show it to you in a couple of minutes on the next recording. There is a high degree of risk on the 60 seconds option because of the quick moves and the slippage, and it seems to work best during economic releases. But more details on the next recording, so please stay tuned for the next recording.